Hey, Small Axe community, it's your boy Nico. This show is dedicated to helping you use your small axe to build a personal empire. So, on this show, I'm going to share some real, raw, behind the scenes info that's going to help you build your own multifamily portfolio. So, if you enjoy this show, I would love it if you could share it with somebody that you think could get value from it and write a review. It's the only way that we can grow this thing. Now, let's get to work. Let's jump into this episode and start sharpening those axes. Old brokers don't call me anymore. New brokers call me now. What the hell? All right. So for years, I spent, diving into these multifamily properties, looking at deals, looking at opportunities, providing feedback to brokers, sharing my thoughts on deals. I've always been 70, 80% of asking. And that's just the way it goes. If you are as well, or if you're even at 50% of asking, you're probably right. And the brokers are pushing those numbers. Yes, that's their job. I totally get it. At the same time, deals got to get done and they have to be real deals for people. I have the feeling, the inkling that 20, 30 years ago, multifamily properties, buying a multifamily property was very different than it is today. And I also have the feeling that they were cash flowing, and I have the feeling that they were better deals back then. However, perhaps the expertise was different and there wasn't as much knowledge and data to support things in the market, what's going on. Maybe there wasn't enough news. I don't know. But today, let's say today, 2024, as I'm recording this, August 31st, 2024, shit's done changed. Okay. I know that there is so much more competition today than there was 20 years ago. I know that there's so much more competition today than there was 8 years ago. Okay, there's a number of multifamily investing groups out there. There's a number of mentorship programs, coaching programs, mentors, programs where you can find meetups, you can chat with people, you can learn how to buy multifamily apartment buildings. But should everybody be buying multifamily properties? I definitely don't think so. And I also think that this is why brokers have been able to push the numbers so high. 2 years ago, 2.5 years ago, prices were crazy high. The market was crazy competitive. People were buying things based off pro forma. Yes, you're supposed to buy based off pro forma to a degree, right? But you can't base your purchasing off hope. You can't base your purchasing off what the broker says can happen, what the seller wants. That's not realistic. I've now owned 70 units in one zip code. We know what it takes to manage a property. We know the operating expenses. We know where rents can be, should be. We know that we can't push rents right now. So if you're projecting, or if you're looking at underwriting and somebody's projecting 3% rent growth year over year or more, you're in trouble, guys. It's not necessarily going to happen. So here's what I'm doing now. I am underwriting for market rents today. Yes, properties have units that are not rented at market value. I totally get it. It's totally true. So I'm getting those rents to market value, burning off that loss to lease over 2-3 years. Fair, very fair. If you know how to operate a property, that's very fair and aggressive on my end, okay, as a buyer. And then I'm also making year 2 right now flat, zero rent increase. It is the way it is. You have to do that. Yes, year 3, I'm back up to 3% year over year. Okay. I do believe in the market. I do believe that things are going to get better. But brokers are pushing these huge numbers because they have to. That's their job. I can't hate on it. But now it comes back to this, what I said in the beginning. Old brokers are not reaching out to me anymore because they know my position. They know where I'm going to come in. They know that I'm 70% off asking. And that's an aggressive number for me. 70% off asking gives me 5 to 7% cash on cash, an IRR of 12 to 15%. My standards are lower now. An average annual return of 12 to 15%. Equity multiple of 1.5 to 1.75. That's not stellar. That's not excellent. Our investors don't necessarily want to invest in that. But that's where the market is today. And those are the properties that are going to be singles, doubles today that are going to produce good returns in the future. That's my way in today. So the brokers that I've been talking to for 4+ years, they're not even reaching out to me with a pocket listing anymore. They're putting it on the market. They're listing it. They're saying, hey, this is overpriced. Basically, this is my interpretation. Hey, it's overpriced, but we're going to market it to the general public. Now, on the flip side, new brokers are reaching out to me because I'm opportunity to them. Here's what happened this weekend. I got a phone call from somebody who found my properties. He found that I am the owner of 70 units in Lakeland. And he said, this guy's a potential buyer for me as a broker. So he reached out to me with two off market deals. Again, I'm 70% of asking or 80% of asking, depending on whether or not it's seller finance. And these two properties are seller financed financing options. So I am 70 or 80% of asking, and I offered strong terms on my end for what I know that this property can do because we literally own 70 units in this vicinity. We know how these are operating. I am not going to be subject to the whims of a broker or a seller that wants a certain price. Unless, of course, the terms can work for me and my team and my investors. So it's very tough out there. But what is very interesting to me is that this broker told me he was with a larger firm in the Orlando area. That's awesome. He now broke off to do his own thing, and I love the hustle. So he's been calling apparently a lot of people in this area, and he was not part of this area. He was not part of Polk County. He had another team member that he was working with at a larger brokerage that had Polk County in their wheelhouse and was in charge of that. So now what he did, he started his own firm. He's doing all these cold calls. He got two sellers in Polk County in Lakeland to commit to selling with him, which is incredible. I love that. And then what he did, which is more incredible, he found property owners, people that are actively buying, myself, and he reached out to me, found my number, and called me. I think that is incredible. That is incredible initiative and drive from this broker. But I'm hoping that I don't sour the relationship. So my strategy right now is I offered as aggressive as I possibly could. And I gave him my thoughts right away within 24 hours. He heard my thoughts, where my offer is coming in at and why based on my experience. And we'll see where it goes. And I said, look, this might not be the deal that you can sell to us. And I really appreciate you providing this to me. And I would love to be on your radar for the future, for the foreseeable future. This is how you have to do it, guys. And unfortunately, you get 1 out of 100 deals. And even at that 1 out of 100 deals mark, the deals are not stellar, right? There's challenges in the market today. You have to understand that vacancy is higher. I say this repeatedly. You have to understand that there are challenges with pushing rent, and even rent is decreasing in certain areas. So just be careful. You have to be knowledgeable on the fact that there is longer vacancy. So for example, let's say you have a unit vacant. Instead of 2 weeks being leased up, it might take 45, 60 days to lease that unit up. It's tough. You have to be leasing, you have to be marketing everywhere to find residents. And then those residents have to qualify. And you're also competing against people that are moving back home. So there's a lot of factors going into today's market, as well as the increased inventory that has come to market over the past year or so and will fizzle out and will be absorbed in the foreseeable future as well. But for now, we have to be careful. We can't get into a deal using pro forma numbers, thinking that, yes, it's not cash flowing today, but it'll cash flow in a few years. That's crazy. You can't do that. And it very well may be true, and it very well may come to pass. However, you cannot underwrite that way. You have to stick to what is working today. If you get into a deal, you got to understand that it's got to cash flow today based on your particular underwriting. Now, if you're struggling with underwriting, just reach out to me. I can help you. I have a model that I can share with you. It is free today. Version 2 is being worked on still as we speak. You'll get that as well down the road. But right now, I have a free version that I'm sending to people. If you want, just reach out to me. It's info@smallactscommunities.com. Guys, have an incredible week. Crush it. Be on the broker's radar, but don't be pushed into buying a bigger deal or a deal that doesn't fit your criteria based on your particular underwriting. Again, I got to reiterate, there's a lot of mentorship programs and groups out there that are pushing people to buy properties that don't necessarily know what they're doing. The prices are inflated still. So make sure you're getting a deal that works for you. If you have any questions or want to review a deal with me, I am very knowledgeable in the Central Florida market, and I can certainly help you in any other markets with different capacities. So reach out to me, info@smallxcommunities.com. Crush the week. Know that I am here for you, hopefully providing value. I love you. All right, and that's a wrap, Small Axe community. So I wanted to take a minute to say thank you so much for listening to the show. And if you liked it or got any value from it, it would really mean the world to me if you would share it with someone else and write a review. Remember, guys, keep sharpening those axes. Let's get out there. Let's crush it. Love you guys.